in terms of that, creating that large portfolio and getting the true income, in the serviceability calculations, it was not happening. So that bank said no. And number two was, even if the bank said yes, I was finding the yields were getting lower and lower because, 2010 to 2015, first 5 years in growth in that period, like I was investing in all states like New South Wales.
Welcome back, Leverage Addicts. Welcome to another episode of our podcast where we talk about properties and finance. I'm your host, Blandon, and today I have a very special guest. If you guys have looked into the Australian market, if you have looked in commercial properties, you would have come across Scott, which is he's from Rethink Investing, and they're the number one buyer's agency for commercial properties. Even the last time when I went to Melbourne, like the ads keep popping up everywhere, and I was intrigued with a lot of the case studies they put up on their Facebook page. The numbers look amazing because the commercial real estate is obviously has a higher yield when compared to residential. And he's obviously had a really good track record around investing himself, because Scott's gone from in 2010 starting his portfolio, and today is at 88 million. And so between that, he's helped countless people get into commercial real estate. He's got his own book. I'm going to put it up on the screen, and you guys can see the link in the description as well. And why he believed commercial is such a great way for the average household to build financial freedom. And so today, I'm going to try cover three things. The first one is his journey to building the agency, to building his portfolio, some of the challenges in between, and we want to have a little bit of an insight to the buyer's agency, and lastly, what are his plans in New Zealand, because he's just launched Rethink in New Zealand, which I'm quite excited about. And hopefully, we will be doing more deals and more podcasts together. Welcome, Scott. Awesome. Thank you for agreeing to jump on, because I know you're a busy guy. You have a very big agency to run. And I thought we can start off with just learning about, how you got started in properties, because I believe you have an engineering background.
Yeah, that's right. I studied engineering. I thought it was a good things, and rude shock when you actually get into the workforce, because the hours are massive, and every 2 years or 3 years. So I just thought that's really what I want to do for the next 40 years of my life. So hobby on the side, which was property investing. The goal was earlier than normal. If I could do it by that would have been a win. But turns out things happened a lot quicker, and he was just a tool.
Was there a trigger for properties? Was it like a book? Was it like somebody that you know, or parents' influence? What were the major, inflection point for you to get into properties?
It's hard. It was, 14 years ago, 13 years ago. But I was reading some of those old school magazines they had. Do you remember called Australian Property Investment Property? Pitching them, because some were quite young, some were quite old and very wealthy. But every time I read someone's story, it was like an inspiration, because they all had different strategies. In mining town properties, or anyone in the commercial space, by the way, that's kind of the market. But I started in residential due to that. And I guess I didn't have a huge, I worked all through uni. I worked in and washed in a bar 14 on and off from a very nearly 10 years to come up with 60 grand. And that was enough for a loan into a Sydney property, and the rest is history.
That's so good. I remember watching one of your YouTube video where you gave a speech in your graduation, and investing started really early on for you. It was something, taught from your family. And I thought that was a very interesting story that you shared. Could you tell us a little bit about that?
Great point. I was inspired by my father in shares. So at the time, I remember what it was, but I had about $500, and we're talking, put it into Telstra shares with his guidance, and I was exposed to dividends. And I was very young, I was at the time, and I don't know, $14 of at the time, and think it's free money. If I'm just sitting it as home, that money wouldn't have quartered. And it just triggered the mind to understand that money needs to be invested. And it Like it was without question had to be done. You don't save your way to wealth. You shares and that just kind of filtered through to kind of a cash flow positive mindset because I like the idea of the dividends and the shares. Sure, there wasn't much growth. Those Telstra shares kept coming. So I like that idea of cash flow. Kind of what triggered it me into more investor towards highly, the prices are high. These rates were pretty similar. Not were now. And my way was flat. Granny flat.
Far out. So your first property was cash flow positive. Yeah. Wow, that's a lot.
And it was, especially for us at the time.
That's actually a lot.
I was 23 and 200 a week at the time. My wife were that 200 in the travel. We're like, well, that one trip, they buy you pay rise. A pay rise if you're smart with investing. And I was doing and a box drops and anything I could find with websites over here just to under certain price points, 4 bathrooms, because what kind of houses have duplexes, like things like that, dual things. So there's way different properties through the
That's so good. And I'm just trying to look at my own results, right? Like your portfolio is 10 times and you can see the compound effect because you started way earlier, like not in terms of property investing, but the mindset of investing. Because at 15, 16, I'm buying skateboards and I'm buying, in high school, right? Like you try to look a little bit different because you're like, okay, could I buy branded pants or branded jumper to go with your uniform? And you get told off by the teachers, but you still do it. And it's so good to see. I guess when we talk about investing and starting early and compound effect is like you are a testament to that. And that's so cool to see. And I thought maybe if we can transition into like how you got into commercial, because you started with cash flow positive residential properties. You went for the multi-units, which is what we talk about a lot in this channel. And it certainly looks like it set up a really good foundation for you to go into commercial. And how did that shift happen?
It happened for a couple reasons. The main reason was, I guess there was an issue with the banks. So I had acquired, a dozen or so. It's like the debt was, relatively large. I was still about circa 100 grand a year, but there was factors of safety, like better than anyone in the mortgage game. There's you can get in residential, and that really is a lot worse now because since like in Australia we had APRA in 2018, was kind of safety nets essentially. It's our market is quite the banking system, but in terms of that creating that large portfolio and getting the true income, in the serviceability calculations, it was not happening. So that bank said no. And number two was even if the bank said yes, I was finding the yields were getting lower and lower because, 2010 to 2015, first 5 years in growth in that period, like I was investing in all states like New South Wales, South Australia, like I was borderless. And that was because it allowed me to target markets that I thought were beginning their cycle. I saw affordability as people can spend more, essentially. So I didn't target much in Sydney because that was becoming. I was buying at 8 to 10% gross yields. We're now selling at 6% gross. So reduction in yield versus the price because the rents were staying similar, but the prices kept going up. Position again, you got to accept a lower yield, and that was not hitting metrics. You plug it all in, you got to make it work. It wasn't working. I started ad that was on the real estate, the residential site, but it was that there, and the cash flow was huge. Like it was the equivalent of a 14% gross yield, and you take all the outgoings out, it was 10% net.
14.
It was 10% net once you take the outgoings out. So it was a because the team immediately went, all right, well, this is commercial. Let's go onto the commercial websites. And I just started scrolling and my whole world opened up. I just enough to option. It was almost education out there. Like remember all those stories, I was just magazines. None of them ever owned a commercial property. They were just residential guys and no inspirations out there. And there were a couple of textbooky, like written for university, really practical, up-to-date information. So ended up delaying a purchase from it, was just talking to leasing managers, lots of low ball bids that just got rejected, and just sort of sounding out the trial and error. There's a few I really wanted to buy that I missed out, but by doing and talking to the leasing managers, because it tells you the true story. Like a sales manager, they represent the vendor. They're going to tell you it's great, everything's hunky-dory, it's going to be a good investment. But the leasing manager especially will say, watch out, that's a dodgy part of the street. There's crime there. There's I've heard lease, and all these questions. You just start remembering it and then using it for.
That's really good. And I wanted to know, because you talked about financing, right? You talked about servicing, and like, because we do mortgages, and if we buy a small commercial property, in the beginning, it's actually harder to service a commercial property because the terms that the bank would offer is usually shorter and you're on a higher interest rate. So what was your solution to that? Like, how did maybe the banks that you were working with saw commercial, commercial term mortgages? In
Australia, we have what we call lease stock loans. So it's a standalone deal. So as long as you got the deposit, which I did because I had the equity, and remember, it was a cash flow positive both my way. So we were saving every dollar we could, and ability from the residential side was getting more and more complicated because there was like a dozen properties in different states and different risk profiles. To have to revisit that entire portfolio every time, like I just bought a 600-700 grand property. It wasn't huge, and yet they had to look at the entire just to an idea of what we could do. So the solution, because the deal stacked up, it was high percent deposit. They just looked at it standalone. It was like a 2-week approval process and double interest rate cover on the thing. It was a deal to do. So I thought, all right, well, that makes sense, because you think about all these fund managers who've got billions under commercial management. They're personally guaranteed by a person, the income itself. So that's one of the differences with commercial. If you buy to lend on itself, but you're right, it's got shorter loan terms. But my first loan term was 1 year. So it sounds bad because it was a year lease, but basically reinstated it at the time. So I've never been caught out by the short loan terms, because the banks generally want that loan as long as possible. As long as you're paying the loan and get through.
So what you're saying is essentially the loan is only secured by the property. Are there any personal guarantee on the income side?
A variety of loans. Like I've got portfolios 40% LVR. So on 80 there's a fin there, but of personal backed loans. I normally buy a property with a 65% loan day one, and then just let it grow, and then obviously the usually gets lower in time as the price goes up. And I only really refinance now just to get better interest rates. That's managing debt is a really good strategy to increase your cash flow, because as you know, as a broker, if you sit on your the interest rates creep up and the loan terms get worse, and you need a lending situation to maximize your return.
That's good. So I guess for the audience who are listening, it'll be slightly different in New Zealand. The commercial loans that you can get, we have less options than Australia. But if you guys remember another episode where we had Provincia on, and they were talking about the GSA lend, so you can have a standalone loan on your commercial property. Depending on where the market is, it could be anywhere from 35 to 45%. So as long as you can come up with the rest of the equity, you could have a standalone loan. Another way for residential investors to get into commercial, and this is how we see as the easiest way to get in, is to use your residential equity, get a residential loan, but you can use it to buy a commercial property. This is for people with a higher equity position, and I think, I think a lot of the clients that you're going to get in New Zealand will probably start with that, and that's probably where you start heading until we get more loan options on the market. It gets a bit more competitive, and I certainly would love to see some of those standalone options giving more LVRs.
Yeah, and look, this is just one of my big outsider. I see it's a tough position right now. Like if anything, it's probably at its worst position. And reasons I've come to New Zealand, I like buying when the market's down. You don't buy after it's grown huge amounts. Like most markets are at least 15% down from peak over there, and the interest rates are high. Softening in the yields at the moment is music to my ears. Because we've already put a couple under here for the 2nd of July. So this feels like there's a little bit where it, before it gets better. BS function in Sydney, which they were talking about New Zealand, and this with a pinch of salt or grain of salt, whatever. But they're predicting a much sharper rate cutting cycle than Australia, are a lot higher. There's a lot more harder, and that's created a weaker market compared to Australia. So an opportunity, a lot of Australians, New Zealand, if there's a best time to get in, it's like right before the interest rates start dropping. That may be the time, one of the mistakes some economists try to do, like in Australia, it's like following footy at the moment. Like it's very political, just like, everyone was, years ago. The top, because I think the economy is enough to justify cuts in the future once inflation comes down, and that is a really good time to drop. There is what we call a yield compression. Basically, people pay more because their debt is cheaper, and that means capital growth. So speculation, but I think the gut feel is it's going in the right direction.
That's great, and it's really good insight. And I thought before we dive into a little bit more about what your plans are in New Zealand, I wanted to ask you, like, for someone to do well, they say for every successful man there is one woman, right, behind. And you have a family, you have kids, you have your spouse. Like, how did that all play in? Because you have to build your business while you're doing all of this. How did you manage?
Well, look, it's so true. Like, if I had a wife that was, for lack of a better word, more material, prioritized money to different things. Like, we rented a house in Sydney, prioritized investing in, these cash flow assets. The compound interest, exactly how I thought. I thought, if I do this now in my 20s, by the time I'm 50, this thing is going to be enormous. And, even using the average capital growth rate in Australia, which is about 7%, like, we've got an $88 million of growth we'll get on average. Now, that's, if you take me back to where we were years ago, you'd never expect anything. That's the magic of comp, small in 20 years as well. That's the thing. But we around chasing, I lived in, pulled up stumps from her career to support that. So those were sacrifices we made. We lived out of our away from friends and family. I wasn't particularly in love with, but there was a greater goal to that, and it was to create financial freedom. And even that first house, not aesthetically pleasing. Like, it was us on a busy road, and we even lived in it just to save there was a duty savings. Like, you guys don't have that, but it's a pretty horrible tax over there. On a property, you got to pay 50 odd on. So we saved half of that. Like, my first property duty at the time, and we had to live, and it was, we were sharing it with another family, and it wasn't living a luxe life, that's for sure. And like, these have really paid dividends in the end. It was a big priority. Like, we were savers, we were good savers, good workers, investors, because we weren't we did a lot of the work ourselves. Like, I sanded it, that was horrible amount.
Really?
Had to go at building a kitchen, and
Scott rolled up his sleeves. You rolled up your sleeves to do all this. Good on you.
I would have paid to do over a weekend. Those are the little things that made big differences in time. So yeah.
But what dream were you selling her? You would have had to, like, keep selling her the dream. Like, hey, we bring it back.
She grew up on a Greek island, a small one, like with 30,000 people. So they lived so I just never needed more. Happy just to be content with life. So, like, her words is, as long as we're comfortable. That was really her goal, to have the biggest house on the best street. That was really nothing that came into the next option.
That's great. And so now you've taken Rethink to New Zealand. What are the plans here? What are you wanting to achieve? Because buyer agency is still quite young in our industry. Maybe you can give us a quick rundown.
Yeah, so operating a buyer's agency in Australia, and we started it as a residential at the time, and I moved it towards a primary at the time, and we've basically grown to be the largest. And we control a really high 50 properties per month. That might not sound a lot in Australia, but almost 20% of the entire volume that's listed online Australia-wide. And out of that, I'd say we'd control our buyer's agent market share. This is from market research. So there's not much more we can do here other than maintain our own. It's almost like what I've been asked by New Zealanders since 2021. A lot of them have kind of been listening to the podcast. I've many of the commercial buyers agent, no, not buyers agent, commercial sales agents over there to just get some more info on a different country. And a lot of it's relatable, like an industrial property is an industrial asset, a shopping center is a shopping center. Half the tenants belong in both countries as well. So there's, you're almost like another state of us in a funny way. But I didn't want to come into the market of 2021, and I saw it too hot, too sharp. The interest rates didn't make sense. Yeah. The growth was rapid. Like after COVID, insane. Now it's too hot. I saw it as a risk, and I didn't get in at the time because commercial assets and 5%, who knows? But there's in the market happening there. There's talk of interest rates dropping. So I saw it this year as the year to get back in. Australians that want to invest there. So it was kind of like almost a diversity play for some of our clients in Australia who are, there's a lot of overlap between the countries, but we're introducing buyer's agency. I believe there might, like it's 10 years ago in Australia, if I've got to quantify it, educate. There's, what is a buyer's agent? What do they do? We went through in Australia, especially when it came to commercial, people didn't even consider to educate them about what the right is. Does this grow? Does it, always have a long vacancy? Break the myths down for the market. And that just means that people will understand the asset class before investing and then likely use a service like ours. So we're coming into it and excited. Like it looks like the demand's well and truly there. Like it's you guys working in NZ for Rethink on the ground there, and it's all starting to kick off.
Awesome. I'm really excited to see what's going to happen because personally, I've been trying to look for more educational content that is local. And now that you're building this up, this knowledge base, I think a lot of investors will be excited as well, especially people who are listening to this podcast. So I think there's a lot more to come, that we can try help each other on. So I want to wrap up maybe with this one last question. So, like we've heard this story. Now, what is the mission for you moving forward, right? You pretty much, don't need to do much more, right? From financial standpoint, what does it mean for you in the next 10, 20 years?
Deep question. I like it. Someone once said, like, it's the only thing you leave behind is your reputation. Once your life's done, and obviously, want to leave a good family, like for your kids, raise them well. And from a business point of view, it's really about leaving good marks, as many people as possible with an asset class goal for us. We've helped 4,000 plus clients, like, over 4.5 billion in property. And the numbers actually, it's more just like, how can we help more people learn about this? And this is a big part of New Zealand. Like it's so exciting for me to come, because in Australia, most people know commercial now. Like we've spent the last, half decade talking about it every day. Like you said, it's all over the news. It's public knowledge now. So we've seen our investors knowledge up, and now they're self-sufficient. They use us to spot a good deal and do the due diligence. It's very automated now, so the business just churns. And it's kind of fun again to talk about, like, because this is like your average residential investor. I'm not talking, there's plenty of people that know extremely knowledge about commercial property, but it's not mainstream. And I guess what we want to do is create it mainstream for New Zealand, where we're bringing one of the most sales agents from NZ, from one of the major global companies, to come over to Australia next month just to speak on our podcast. So that'll be the first time Australian probably has heard about commercial properties. Demo that, listen to that. So I'm excited. I'm going to learn a lot from this guy who does, $100 million type deals and stuff like that. And just probably continuing on with that thought, like we would like to expand globally. It's because this service doesn't really exist the way we do it in the US. It doesn't really exist. It doesn't, like, But the problem is many markets aren't ready for this. Like you wouldn't go into Europe. Like us, my wife's half. Would I do this in Greece? No way, because it's a different ball game. I think New Zealand makes sense for now. Other countries will. So it's just playing the game of business, leaving a good mark and the goal.
Awesome. That's inspiring, Scott. And it's been an absolute pleasure to have you on the podcast today. And for everyone who's listening to this point, if you guys have questions or other things that you want Scott to share on another episode, definitely drop a comment below. And if you find value in today's episode, definitely just share with one other person that's going to also find value from it. And where can people connect with you, Scott?
This way is just Google Rethink Invest will pop up. Yeah, just or via yourself. And yeah, I'd love to speak with people. We've got guys on the ground in NZ, highly skilled operators, finding deals, and yeah, the yields are a lot better than Australia. So again, it's a whole nother. It's like hunting for treasure. Although I'm excited to see where your market goes over the next couple of years.
Awesome. Thank you, Scott.
Thanks, Blended.